Aside from the odd IPO here and there by some big-name companies, major headlines from the Korean stock market were few and far between last year. But many market watchers think it will be a different story this year. For more on how prices could move and what investors should look out for, here's our Song Ji-sun.
2014 was a lackluster year for the Korean stock market. The benchmark Kospi index closed the year at 1915, 100 points lower than it started, a year after being trapped in the 200-point range and below the 2,100-point barrier. This year, with the country's economic recovery picking up pace, market analysts expect the Kospi to break out of this pattern and top 2,200, most probably in third or fourth quarter. Among the main factors setting the tone for the market were the Fed's decision to raise its key interest rate and the performance of Samsung Electronics, which accounts for 14% of the overall market capitalization. Many analysts believe the Fed's rate hike will have a limited impact on the bourse, but the big question about Samsung is whether it can shore up its poor smart performance from the third quarter of last year.
We are expecting a low of 1870 and a high of 2260. There could be some adjustments in the first half following rate changes in the U.S., but the stock market will rise at a moderate rate in the second half.
One main theme for the market this year will be dividend payments. Last year, big-name IPOs took center stage, partly due to the listing of Tail Industries, the de facto holding company of the Samsung Group, and its affiliate Samsung SDS. But the number of companies seeking IPOs will drop by half to around 30 this year. Among them are low-cost airlines Jeju Air and Air Busan, and Hyundai Group's advertising arm, Innocean. The focus this year will be on how shareholders benefit from a government policy on increasing dividend payments. Policymakers have voiced concerns that too many companies are stocking away too much money for reserves and that Korea's dividend payout ratio is lower than that of emerging or developed markets.
We will seek to increase the influence of shareholders in deciding dividend plans to make them more reasonable and help institutional investors to become more involved in the process.
Now, another point to look out for in 2015 is whether the Korean market can be included in the developed market category on the MSCI index, which is an important factor when global fund managers draw up their investment portfolios. Korea has been regarded as an emerging market, largely because of its currency's limited convertibility and limits on foreign investors' ability to trade in securities. The question of whether Seoul has made progress on improving investment conditions will be decided in June. Song Ji-sun, Arirang News.